All right, guys. I've gotten a ton of requests to go over the level 99 swings, probably because we had such a high win rate over the last month in this channel. 100% win rate. Some of them even hit both sides of the levels, which is, I mean, just insane to me. It's like you can play one stock, which we'll see. I'm going to go over Netflix as an example, or you can play both sides of the coin and come out on top. So on 10/16, I alerted Netflix as a top range breakout over 639, 42 and under 621.99. Now here's the thing with this weekly time frame. Some of these level 99 swings moving forward will be from the monthly time frame, giving you a little bit more time to enter, a little bit more leeway on your entries and stuff, but I'll go over all that soon. This is a weekly setup. So if you look here on the alert, the chart, it is on the 1 week view. And what I was looking at, this kind of line right here, I'm going to go to the chart in a second, was a top range breakout play. And we got an inside week. So something that I want to talk about is these breakouts that we always play, because a lot of times people are asking, oh, where's the entry? You know, how do you know it's going to break out? Well, I don't know it's going to break out. That's why we use levels. So if it gets above a key level and confirms either by volume, closing on a higher time frame above that level, retesting that level, which we'll see with Netflix, and so forth. Also, guys, real quick, I just want to mention that this is purely educational, not meant to be financial advice, and I'm also sick, so you might hear some coughing and whatnot, but it is what it is. So here's that line, right? So here's that breakout of that line. It broke out the week prior. So on the 4th, the week of the 4th is when it actually broke out of this line. But I'm not someone who just, thinks, okay, it broke out, now it's going to go, haywire. So, okay, you get a breakout here and you get a huge flush. You get a breakout here, a huge flush, breakout, flush, breakout, flush. It happens all the time. And these weren't huge breakouts because it's not above previous highs. It's not above a key level. This was a huge key level because it's a trend and creating new highs. So you got two confluences going with you in this direction, along with, obviously, as I mentioned, the options and algo were both bullish, which is huge. So when that confluence occurs, it's really probable these trade setups will happen. So I alerted it here. The reason there's two reasons why I alerted this. Well, actually three. It had just recently broke out of this trend line to the upside, and this inside week retested that very level down to the flipping dot, basically, right? And on that retest, I said, okay, this is either going to go squeeze and go high, or we're going to get a further retest and a breakdown. And here's actually kind of what happened. We were able to play both sides of it. And now I'm going to get into kind of the entries with these level 99s and trying to better understand, okay, here's the alert, which is a weekly time frame. Do I have to wait for a close on the weekly? I mean, you could do that, but I'm going to show you exactly what I do when I'm trading these and how it's benefited me from going from a weekly down to a daily, down to an hour, down to a 30-minute kind of time frame. So we're on the weekly. That's the setup. We want to see a break above this high, this inside bar, which is $639.42, or a break below it, which also is a break back into that trend line, which is about $621.99, $622, let's call it. So let's go back down to the daily and look for entry. So I alerted this. Let me make sure when I alerted this, my brain's foggy. 16th, on the 16th, right? Okay, so we're looking here. The 16th was a Sunday, so we're actually looking at, or a Saturday, so we're looking at the 18th. So here's that trend line from the weekly. So the trend line obviously does play an important role with this. And we have that trend line, we have the lows in our mind, we have the levels of 621.99 on the low side and 639.42 on the high side. I believe that's what it was. So those are the levels that we're watching. So now we get this opening. This is Monday. We get this opening day, and it has a high of $638.41. Well, is that our level? Is that above our level? No. So you're not entering here. on this day. Okay. Now this is just if you're trading the day swings. This is what I probably recommend for people who are struggling with low accounts. If you've seen high losses, trading intraday stuff and trying to get in and out really quickly. A lot of people think that's the safer way to trade. It is not the safer way to trade. I'm gonna grab some water here. The safest way to trade is confluence setups, where 5 different things are saying, hey, this is what the trade might do. So we'll get into that as well. But here we go. So the opening day, no, it didn't break out of our weekly inside bar. It kind of stayed in between the two. Oh, but we have a low here. We have a low of 620.59. Now, if you're playing the daily chart for the swing, you're not going to enter this because it didn't close below that. It shot right back up. But if you're looking up on the 1 hour chart, goodness gracious, got to go all the way back to the 18th. If you're looking on the 1 hour chart, do you get an entry for that? No, you don't. Not on the 18th. Not at all. You have a test of that level, but you don't get a close. That's such a key and an important thing to think about when you're doing this is on these high from weekly, basically don't go lower than a 1 hour when you're trading the weekly. Like if there's a weekly alert, let's say on the level 99, which most of them are going to be, you shouldn't go into the 30, 15, 10, 5-minute charts because you're going to get stopped out too much because the closing of the candles are obviously like, oh, it's triggering. Well, I'm not one of those breakout or breakdown traders who tells you to take a trade just because it crosses a level. I mean, you could do that, but the risk is astronomical with that, where I like confirmation with my trades in order to enter them, which we'll get into, obviously, coming up here, because obviously Netflix breaks the side. So we got the 18th right here. This day we do break above 600 and what is it, 639.42. Man, I can't remember that. 639.42. But what's the close? 639. So if you're trading the daily, you're still not in. You're still not in. But if you're waiting and if you want to get in, you can go down to the hourly chart on the 19th, I believe it was. Yep. So we're looking at 6.3, anything over this. So we have a fake out here. No close. No close. No close. At the end of the day, it closes. Let's see what the end of this candle is. The high is 639.68. Closes 4 cents over our level. 4 cents. So you can enter here. You can enter here. Absolutely enter here. So let's draw just an arrow here. You can enter here. It's 4 cents. Not the kind of confirmation I would be hoping for. And not the time of day that I would love to enter a trade right at close. That's just my personal preference. I don't like. I basically want to be done trading by 2 o'clock, like entering my trades and having to exit them and watch them if I'm swinging. Like I don't want to watch them in the close. That defeats the purpose of a swing. But you could enter here. Technically, it's above our level by 4 cents. You could enter here and you'd catch the wave. Now, here's the thing. What's the low here? 617. You know, so we have. What was that? What was our actual low on this? 621.99. So we don't get a close below that right now. We don't get a close on the 1 hour below that. So we're not going short. So you're not getting stopped out. If you're getting stopped out in this trade, I can't help you because I think you're either scared of losing money or expirations or decay or whatever, and you're not picking the right contracts, which let's go over that. So if you're looking at a weekly time frame, trading down into the daily and 1 hour chart to get your entry, you're not going to take a weekly that burns. You're going to take a contract that's 2 weeks out, and you're going to try to get one that's near the money or in the money, because then your delta is going to be much higher. Don't take deltas that are, 0.2, 0.15. Try to look for the ones that are above 0.5. 0.4 is fine because most contracts rest in that 0.4 to 0.49 range, mostly on the 2 week charts or the 2 week expirations. You can play a weekly. But if you're going to play a weekly, know that it's going to decay quicker, and you are going to absolutely want to take ones that are in the money because that decay won't hit as hard. And when the stock does move, you will capture more of a reward that way, just from the intrinsic value of the contract. So if you didn't catch that, too long, didn't listen, whatever it was, if you're trading on the weekly time frame and you're going down to the daily and 1 hour for entries, try to take a 2-week contract that is out 2 weeks. Okay, you can take a weekly contract, but then it has to be in the money in order to protect yourself from that decay rate. I mean, the theta on those contracts are just intense. Or if you're not planning on holding very long, if you're taking these weekly time frame charts and entering on the 1 hour, you might only be holding for half a day to a day, which is totally acceptable and fine. But do not take far out of the money contracts basically at all on these, unless you're holding for a large swing for 2 weeks. Then you can go a couple steps out of the money and get a delta that's a little bit lower, a little bit cheaper contracts, a little more affordable, enter these trades at a more affordable price. Especially if you have a smaller account, you need to take that risk out. You should only be risking 1 to 5% per trade. 5 is really the high side with that. So there's your entry. On the long side, a possible entry. You get a breakdown the next day. Okay, so let's go to the daily. That's the 20th, right? You get a breakdown on this the next day, right here. But it doesn't close below a level, so you shouldn't be stopped out. If it closed down below this trend line, back into that trend line, I would say that's okay, stop out. 617, you entered at 639. That's a huge drop. That's a huge drop. That's like a 20-some point drop. I get that, but look at this. It bopped off this previous resistance zone, now support zone right here, and it did not close below that trend line that we drew. So I wouldn't get stopped out there. I might average down. I might scale out. I might, if I had 3 contracts, I might go down to 1. I would not get fully stopped out in that, especially trading on a weekly time frame. So what happens next? Rip right back up to 652. So now those contracts you took, let's say you took the 640, 645, they're in the money the 2 days later. Now let's go back to the 1 hour. So if you didn't enter here on that 4-cent move above our level, which is kind of ridiculous, you could enter on this bar right here. The 930 is above our level. It closes above most of these resistance levels here. Maybe not the wick of this one, but you can enter here for a safer one or here for the safer one. Here's where I would probably enter. I don't know that I would have entered here. A 4-cent confirmation isn't much confirmation. I probably would wait for a dollar confirmation at least. That's what I like to see, or a 50-cent confirmation. 4 cents is just, I think we can all agree, is pretty low. But if you get under there, average down, you're not getting stopped out. Even on the 1 hour, you're not getting stopped out. So there's no reason to get stopped out here. You can break your size down or average down on that as long as you see confirmation of it reversing. So you get it went below the line here, the trend line. It got below into this support zone, but it closed above. And then we get a reversal bar back up, a nice green, almost engulfing bar. That's where you could buy cheaper contracts to average down your contracts from here. And then you get a rise up the very next day. And we are so deep in the money at this point. I mean, I probably would have sold probably around 660 because 660 is a psychological number, especially when you're entering at 640. And that book moves pretty heavily. 650, I probably would have taken one out. 660 would be the next one I would take one out. And I probably wouldn't have much here. I may have rolled up 1. But in all honesty, no, I'm not riding this thing to 690. I'm riding this thing to key levels, which if you go back to the daily, you can find, right? So if you're entering here, right? You're entered here. Okay, 641. That's or 639, 46 was our entry. Where's the next take profit? Look back to the left. 646.84. Okay. That's where I'm taking my first profit off. If I have 3 contracts, I'm taking one off here. Let one run up to the next psychological number. 650, 655. Taking one off. If it breaks, if it wants to keep going, great. Taking one off at 660. If I have 10 contracts, I can keep doing this on the psychological numbers. So guys, with this trading system, with these weeklies, with these weekly time frames, this is super key and important to understand that you're not going down less than a couple time frames. Do not get into the 30-minute ranges for closes and confirmations because you're going to get burned every single time. So what I want to see you guys do with these is taking your weekly setup, saying, okay, I'm on the weekly. All right, so where's my levels here? Where's my levels? All right, we got the alert here. I'm looking for a break here. So we get that break. My take profit is here. And then if there's no, obviously there's no, you're looking left, there's no other take profit areas that have been tested before. Now you're looking at whole psychological numbers. You know, 650, 660, 670, 680, 690. Look, it stopped at 690. And, you know, 700, 710. Those round psychological numbers are very key and very important on these trades, on these swing trades. So, guys, this was a huge winner. This was awesome. I mean, just absolutely awesome. So, what I would suggest doing on these is not going less than 1 hour. Find your entry on the 1 hour, 4 hour, or even the daily. Daily is fine too, because look, you wouldn't necessarily enter here on the daily because you'd be like, man, yeah, you look left. Okay, it's not broken that. Here's a great entry. Yeah, you get in late, but you're not risking this huge pitfall. You're not risking a downside move. You're getting in with the momentum. Yeah, you're late. Okay, so you missed. If you entered here on this close on the daily, we're just talking daily. If you entered here on the close, you'd miss out on $10 ish of price movement. But you wouldn't have to endure much of pain because you'd get the break, a double break. You'd get the break of the inside week and you get the break of the previous resistance. And then you're just safely holding contracts until you want to sell them on the psychological numbers. So, guys, this is really straightforward stuff. This is the reason we put out these level 99s was to help people who can't sit there and stare at their phones all day, sit there and sit at the computers, who're not a day trader. You have an account size that's small. I mean, I'm using the tiny challenge on these basically. Once I hit $500 with that account, I'll probably switch over to the level 99s. Right now, I'm doing level 25s and I'm doing the daily level ideas as well, which I will do videos for those pretty soon for you guys as well. So I hope this answers some of your questions. I'm going to recap here just in a second so we understand the rules for level 99, how to use them, how to look for them, how to trade them. But I hope this is useful. If it wasn't, just let me know. I'll re-record something. I'll answer your questions. I'm always here, always available for you guys. Yeah. So recapping, you're looking at the weekly. That's the alert. Okay. Usually, sometimes it's daily. You're looking at the weekly. You get the alert. You pull up a chart. Draw the trend line that I give you. You can copy my chart that I send you. You look at previous resistance marks as take profits usually, support areas, and then you go down to the daily for entry or you go down to the 1 hour for entry. Nothing less. Contracts, no more than 5% of your risk. Even that's a little high, but I will say you can, if you have a really tiny account like $100, $200, $300, $400, $500 account, 5% is okay because you wouldn't be able to play anything otherwise. So 5% highest risk. Contracts 2 weeks out minimum, unless you want to play in the money weeklies to negate the risk of theta, or if you're only trading or only going to be trading the contract for a day or less, then you can take the weeklies. I hope that's straightforward, guys. I know I'm sick and my brain's all over the place, but I really hope that that's straightforward. And maybe, you know what, before I sign off and say see you later, let's pull up one of our next plays. Okay, we got up inside month on Airbnb. Okay, approaching a resistance area and approaching a support area as well. So we're not out of the bag yet with this one. And this is a brand new stock, so look at this data. I mean, you just don't have much to work with. You got a couple earnings, you got a couple things, you got earnings coming up. Yeah, earnings coming up. So let's look at this real quick. Okay. What we have is the inside month. I think we also have an inside week. Yeah, inside week as well. So this one is really setting up to be something special. To the downside or to the upside. We don't care which side it goes. We just want to be able to play it accurately. So I'm sending this out. You'll see it in the alerts tomorrow probably. The high is 176.75. The low is 160.63. We are going to take longs above 176.75. And we're going to short below 160.63. It's a $16 gap. It's healthy. So now if we go down to the weekly, you can play this on the weekly. You don't need to wait for a daily close if you're playing fresh month contracts and stuff. Might have to redraw or draw a second trend line here though. Yeah, this is where you get subjective with these trend lines, man. But they are pinching, so that's good. Okay. So you have an inside week. Now you can break this down even further if you wanted to. I'll even mention this in the alert. You have a high of 172.65. You have a low of 166.65. The safest route is these levels right here: 176.75, 160.63. But you can also do this if you want a little bit quicker entries. So our high here is that, and our low, bizarre low. You don't often see that. No bottom wick, which is very bullish. Very, very bullish indeed. Okay, so we go on the weekly. We say, oh, it's inside week as well. We draw those secondary trend lines if we want to play it on the week. Go down to the daily. Going down to the daily, what do we see? So some tailing wicks off of the support line of the trend lines. We see room above from the monthly charts. We see left, it's got some serious resistance. And here's our key levels on the weekly. Here's our key levels on the monthly. All right, let me change these colors. Yeah, you get it. I'm not going to change it. So here's the monthlies. Here's the weeklies. You can trade it within this weekly break. Okay, so if it breaks above this, gets confirmation on the 1 hour to daily, go ahead. On the short side, go ahead. Actually, yeah, on the short side as well, you can do that. But be aware of this bottoming wick here, 165.11 area. But again, these inside weeks and inside months are super powerful with these trend lines, which is why we have such a freaking high win rate. I mean, it's just insane when you do all this confluence trading. And here, we'll even go over here. Let's do this too. So this is what I do on the back end when I'm looking at these trades, just to make sure that I'm getting the full scope and full picture. I'll go to trade ticks and I'll type in. You guys can do this with the custom query. You guys don't need to ask me to do this. A, B, and B. Short term's bullish or bearish, but we're not looking for short term. All right, so it's confluencing. It's dripping a little bit. Let's go up one more time. There we go. All right, that's interesting. Okay, so long term bullish, bearish on the short term algo, bearish of the overall flow. So sometimes this doesn't confirm what you're seeing or believing the stock might do, because like I said, look at this. This weekly, it's a super bearish bar or bullish bar. But again, we don't care where it goes. That tiny little wick. We don't care where it goes. What we care about is trading with confidence and trading with conviction, up or down. We don't care. This is a beautiful setup here, stair stepper. But so I'm biased long just because of the way the chart looks. But I can't fight the flow. I'm not going to fight the flow. The long term one is here. Let's keep looking here. Let's see what the hot contracts are, unusual stuff. Yeah, that's more short term. It's more short. These longs, calls, some of these puts. On the S side. I'm getting a rabbit hole. Anyways, back to the chart. So, yeah, so we have inside week, inside month. So you can play two different levels. I will alert both of them. Don't worry. You don't need to pause the video. I will alert both of them in the channel, so you can play either one you want. Go down to the daily for that. Look at your entries. Look at the resistance. Draw these out. And then go to the 1 hour. Draw some key levels out as well. Look at this. I mean, look at this wedge forming. This here, let me do this. Look at this wedge coming out on the 1 hour. I mean, come on. Tightening formations here, man. Something's going to break. That's super bullish, obviously, but we've seen big dips and big rises. This is moving really steadily. This is really looking like key distribution here. It could set up for another run. So obviously I'm bullish on it. But anyways, so guys, inside week, inside month. Here's what I do. Is that inside day as well? My goodness, we got inside day on it. Airbnb, what are you trying to do to us? All right, draw the levels on the monthly chart. That's our monthly. Go down the weekly, draw weeklies. I don't even know if my magnet will hit that little tiny wick. Go down to the daily. Not really even going to draw one on the daily, honestly. My gosh, we run right into that. I'll draw the short one just because there's more area. I'm not even going to draw one above it because it's so tight. That wedge is getting really, really tight, and that's what she said. So here's what we're looking at, okay? We have our monthlies, our weeklies, and our daily now. The odds of there being an inside month, inside week, inside day is pretty slim, but we do kind of have one here. So this one's going to move strong, potentially strong, one way or the other. So what I'm suggesting we do is we play the weekly. We look at the weekly chart, say, okay, got the weekly, we got the monthly. I'm going to look for entries on the 1 hour above this level, or above this level, or below this level, below this level. And we're going to go daily because I don't want you guys trading too short-term trades. So we have our levels. Guys, draw these out. Make sure you get on the weekly and the monthly charts to make things a little bit less noisy. All right, so here's what we're looking at. A little bit short-term plays, the inside levels right here. Longer-term moves are going to be these outside levels. Obviously, guys, I'm going to update you guys as these break, as these go, as we're seeing trades occur within Airbnb, okay? But you do not get down to that 30-minute, okay? You turn on your 1 hour. I mean, do this if you have to. Get rid of these. If you're struggling with intraday stuff, look at the 1 hour, look at the 2 hour, look at the 4 hour, 1 day, 1 week, whatever it is, okay? That's what your chart should look like if you're struggling right now. And you should be taking these trades on confirmation, on closes of the 1 day or the 1 hour, okay? Obviously, I can't guarantee 100% win rate every stinking month. That was kind of crazy. But I think if you guys get into these trades and are looking for 10% moves on the options, and you get out, you scale out, maybe let one go 20%, 25%. Stop trying to hit home runs. 10% adds up very quickly to an account, especially a small account. Well, big accounts too, but they add up extremely quickly. Stop trying to hit home runs. I know everyone on FinTwit and on Twitter is showing you guys that you guys can make, you know, oh, look, my Tesla call went up 14,000%. That happened to me the other day. It's like, okay, but I only had one contract and it was out of the money. It's like, I'm not hitting $14,000 on every contract. I'm hitting very tiny amounts because I like to grow my account very small and take out a lot of the risk because I don't like losing money. I lost a lot of money in the market when I first started, you know, a decade ago. So, guys, this is what I want you to do, okay? I want you guys to follow these levels, learn the charts, learn to draw the trend lines. You know, I'm going to go back. I'm going to do it right now, actually, so I don't forget. Draw this trend line on the weekly, okay? Actually, I don't want it there. I want the recent poke out. There we go. Okay, drawing trend lines, real tight formations. And you can go down to the daily and do the same thing, okay? Where Airbnb is a classic setup for short or long. We don't know what's going to happen. We're not trying to predict it. We're trying to react to the market. All right, guys, I really hope that was a lot of information. I know I rabbit trailed a lot. Gosh, this is a long video, but hope that works for you guys. And if you have questions, let me know.